Hey there traders, it's Jeff from thestockbandit.com. I'm sure glad that you've joined me for this video. So in this video we're going to talk about something that, we've all heard this phrase that timing is everything. We know that's very true in life, but it's also extremely true in trading. Perhaps in no other place is it as important as it is in trading, because your operating time frame is going to determine your directional strategy, the level of risk that you're willing to put on. Many other factors are going to kind of piggyback off of the time frame that you're aiming to operate on. And so as traders, a lot of times we'll approach the chart and we need to take into special consideration the time frame that we expect to operate on. You don't just look at a chart and say, that's bearish, I'm going to stay short until it's no longer bearish. By the same token, you don't look at a chart and say, it's in an uptrend, I'm just going to buy it and stay with it as long as I possibly can. If you're doing that, it might not get you in big trouble, but it might not make you as effective as you could possibly be. So let's take a look at a chart here. This is EQIX. I've got no position in this stock. Just ran across it in looking through my nightly charts, and I spend a great deal of time looking through hundreds of charts every day after the market closes. I share the best setups that I'm finding and the ones I'm looking to trade in tomorrow's session with subscribers. And so I ran across this stock, EQIX, which is in a pretty well-defined downtrend channel. We saw the stock top out in mid-September along with the market back up here at this 212 area on September the 13th. Since then we've seen a sequence of lower highs and lower lows along with the chart and as this channel has persisted. So more recently we've seen price rally back up and then just kind of stall out, and this leveling off of price has really not brought about additional upside, but it has allowed this descending trend line to kind of catch up with price to where at this point we're just a very short distance from this upper trend line. So this looks to be a bounce within a downtrend. Okay, this is the downtrend, and this is the bounce within the downtrend, and this would kind of be the get out point if that upper trend line gets crossed. And now this thing has potential possibly to move back down to the lower end of the channel, in which case you could just even kind of grab this chart and move it back up. And the lower end of this channel is currently about 165. So you're looking at from current levels about 20 points of downside here to the lower end of the channel, and you're only looking at maybe about 6 points of upside before this channel would be pierced to the upside. So that's good. And if you're a short-term trader, this is the type of chart you look at and you say, well, it's in a downtrend, and so the directional bias would naturally be to the short side. However, as you zoom out on a chart like this, you start to see that this is a longer-term uptrend. Back even going back, let's just say a year ago. Okay, so beginning of December last year, in fact 1 year ago would be right here. So we'll just kind of draw this vertical line right here, and anything that's happening to the right of this chart, let me now zoom in a little bit, and we've seen just a real steady uptrend, and now every little pullback has been bought and this thing has continued higher. Now over the last couple of months we've seen a pretty quiet pullback. So in the bigger picture here, over the 1 year chart, this looks to just be a pullback within an overall uptrend. So if your time frame is longer term, you're looking at this as a potentially bullish setup which may get resolved to the upside. And now you're looking again for that same push through that 190 level, but not just to indicate that it's no longer downtrending, but to indicate that perhaps the longer term trend is going to continue. So pay particular attention to the time frames that you're evaluating your trades on and the time frame that you expect to trade the stock on. If you're seeing short-term movement, that's fine. Pay close attention to that. But if that's not really your time frame, zoom out and understand that there may be a completely opposite play that's starting to set up for that different time frame. So be careful. Always consider your time frame and then operate in accordance with what you're seeing on the chart for that very time frame. Thanks for joining me for this video. We'll have more for you soon, but in the meantime, trade like a bandit.